How's it going, guys? Yas here from Trading Vanguard. I am a technical trader who trades short squeeze, momentum, and volatile stocks. All of the information shown in this video is not financial advice and just my opinion. So, welcome back to my channel, guys. Today I wanted to do something a little bit different. And rather than doing an actual stock ticker analysis, today I wanted to go over the index, the S&P 500, and just to go over it to see the current market conditions and what we can expect next. So without further ado, let's get stuck in. So we're currently on the weekly chart, and what I'll do is switch on the drawings. And what I'll do, guys, is go over the current price action and what I think is going to happen next. So if we have a look, we can see that the S&P is currently in an ascending trend channel. So whereas the past two tickers I have reviewed are in a descending pattern, we can see that the S&P has been in an ascending pattern since at least, if we have a look, at least I'd say, 2019. And now we can see that within this trend channel, we've got an extremely, this is what I've identified. The red part of the trend channel is where it's extremely overbought, and the green is where it's extremely oversold. So we can see whenever the S&P has entered into the extremely overbought, most of the times there is an instant reaction. So if we see, guys, what happened back in April, the kind of second it sort of started touching into the overbought, we can see that it was immediately rejected and slammed back down to the bottom of the trend channel. And vice versa, the second it hits the bottom, that's where, of course, big whales are buying in and gradually starts building back up. Now, what do I think is going to happen? Well, right now, this is probably the longest. If I look back at my drawing, not the longest, but this is currently one of the longest times it's been in its overbought part of the trend channel. So, we can see it's been hovering around the 6,400, 6,500 mark, up till about the 6,900 mark for the past, let's say, 6-7 weeks. So what do I think is going to happen, guys? This is the main question. So look, I do expect a price reversal just because we have been in this overbought part of the trend channel for quite a while. And what you guys can see here, I don't want to confuse people. Whoops, let's get that out of the way. What you guys can see here is this pattern, which is called a Fibonacci retracement. Now, this is a retracement which kind of measures out potential moves for the stock once it hasn't made an actual move. Now, in this case, what I've done is I have done a reverse Fibonacci retracement, which means I've measured its highest high from when it last had a reaction. So this was, before the crash in April. So this was in Feb, to the actual bottom, which was in April, the 7th of April. Now, looking at the Fibonacci retracement, guys, I see here the 1618 level, which is typically a super strong or responsive price level. Okay, so this is where I believe we can see a real technical reaction to the downside, which here I've got marked at $6,957. At an absolute max, I could potentially see the S&P going to 7,000. As a psychological level, I really don't see it going past 7,000. If it does without, any resistances, then we can come back to review, but this is what I believe is currently going on. We can see that it did hit an all-time high, which was 6,920. So just about almost hit its fib level. but not quite yet. And I do believe it will hit an all-time high once it does hit the Fibonacci retracement 1618 level. Again, another reason why I do think it's got more potential to come down to the downside. You guys know from my previous analysis, the open gaps are huge for me. All right, so looking at the S&P, if we look on the weekly chart, it has got no more open up gaps. And if I switch even to the daily chart, we can see that there are no more open up gaps. We just have gaps to the downside, which have to be filled. If we can see here, you know, it's had so many gaps, and just like the other two, there is a 90, just like the other two tickers, apologies guys, there's a 90% chance that gaps to the up or to the downside are filled. So we can see here that all of the gaps from the S&P on a daily has been filled about 91% of the time. So we can see, you know, we've got one at 6,600, so within the top of the trend channel, all the way back down to the bottom. So, you know, a potential price level we can see where it starts to climb higher would be around this probable price level, which is 5,300. If not, the bottom of the trend channel, guys, when it does end up reaching it, that's where I expect a reaction back to the upside. But due to the way the S&P has gradually grown up to the top side, I believe rather than a sort of flash crash, which happened in April, whereas we immediately recovered, I believe we're going to have a slow reversal down and potentially entering into a longer term bear market. And yeah, guys, I do believe that sooner or later the market has to recover just from being super overbought. That's it for today, guys. What do you guys think? Do you guys think the S&P still got more to climb, or do you think it is time for a market reversal? Please let me know in the comments below. If you guys also want another stock analyzed, drop that in the comments below as well. So as usual, if you found this content useful, drop me a like. And if you are a similar trader to myself, please consider subscribing, as I'll be posting more videos as much as I can. I'll try to do it once a day. If not, it might be once every other day. Once again, I want to end the video by saying it's not financial advice. Everything is just my opinion. Trading can be extremely risky, and you should always have a strategy to stay safe. Thanks for watching, and I'll see you guys in the next video. Take care, guys. Bye-bye.